Hello friends, my name is Abhishek Banerjee. I'm the founder of Lotus Dew. Today we are going to talk about how India is appearing to be a very interesting investment destination and what's really happening globally in the context of investments in India. There are three main factors that we need to take into account. First, that India is seeing a lot of flow of foreign institutional investors coming into India, and we're going to discuss why that is the case. Second, the inflation outlook for India is benign, and we are going to explain why we think so. And finally, what we are seeing in China, where every day there is a lockdown and it's actually accelerating the number of COVID cases, and how to think about that and what kind of opportunities does that present for somebody like India. We're going to talk about all of these, right? So first, foreign institutional investors are looking at India as a separate opportunity. Traditionally, India has been part of a cohort of something called emerging markets, which included countries like Russia, Brazil, South Africa, China, and so on. India right now is the fifth largest economy, and it's just above UK. So if you think about it, most people, global investors, are looking at India in its own rights, and rightfully so. So they're looking at, can we look at India as a separate basket altogether instead of clubbing it together with other emerging countries like China, Indonesia, Russia, Thailand, Philippines, and so on. This is making valuations in large caps more expensive because foreign institutional investors, they're generally risk averse. When they try to diversify away their risk, they look at India and they look at the large cap companies as a relatively lower risk basket. So what is happening is that all that foreign money is flooding into and pouring into India, into large caps, driving up the valuation, which presents very interesting forward opportunities for small caps in India. Second thing we're going to talk about is inflation outlook. So what's happening there is that India is importing most of its oil that is used for transport, which basically sends the consumer staples and durables across India in trucks and other forms of transportation. So how we import oil at what price has a huge implication of inflation in India. What we have been able to do is maintain a very benign inflation. 6% for an emerging market is really not that high compared to the fact that UK just printed 11% inflation, which is unheard of in developed markets. So what we want to say is that inflation has a relatively well managed inflation in the past, where compared to somebody like Sri Lanka or Bangladesh or Nepal, where they're seeing a lot of problems with inflation. Second thing is, going forward, if a lot of institutional money is coming into India, they're going to sell dollars and buy rupees, which strengthens rupees, which means our cost of imports will come down, which further puts downward pressure on inflation, right? And finally, the last bit, China, it's not a democracy. People do not have as much of a democratic voice as they have in India, and hence Western countries, which are usually more democratic in nature, they are more comfortable with policy making and power sharing agreements that happen in a democratic setup, and they're looking at India and saying, well, these guys, they are similar to our ethos and democratic values. Can we not have backups in our supply chain also originating from India? And that is very interesting, given that India has demonstrated they can be the back office and the IT support and the IT development center of the world. Now it's a real opportunity for India to demonstrate that they can also take on high-end manufacturing jobs. So it's a very interesting outlook. Personally, we are extremely bullish about how this is going to pan out for India, especially for small caps. At Lotus Dew, we make AI-driven bets in small, micro, and medium companies, and we really think that as a cohort, if you're able to identify this set of opportunities well, you can do pretty well. However, average small cap investing is not without its risk. For example, if you just randomly picked small caps from the small cap universe, 50% of the time you'll actually get less returns than fixed deposits. So stock selection and research and advice is also very important in smaller cap companies, and at Lotus Dew we help you with that. Thank you for watching. See you around next time.